This day is over here. The stock closed at $40. Now the next day, the yellow part is extended hours trading, after hours, and pre-market. The next day, you can see the stock opened at $34. So instead of gapping up above the previous day's closing price, you are gapping down. So $40 previous day's closing price, but pre-market you're trading a lot lower, right? We're talking about $33, $37, and open at $34. So this is a technical gap down. And this is where the inverse of what we talked about for NVIDIA will be most likely true. If you have a stock that has been, kind of extended recently and started selling off and have multiple gap down days, like this one, you can see a gap down once here and once here over here, and actually one more time again, then most of these gap downs, at least on the first 2 to 3, they're going to be potential good entries on the short side. You can see every single time GameStop gap down, after these huge red day, gap down here, stock sold off, you close at $40 previous day's closing price. Next day you gap down, you popped a little bit and sold off even more to $29. And the same trend kind of continued all the way until it went all the way down to $20. So this is how you leverage previous day's closing price with the overnight gap ups for a potential long. If, of course, all the daily charts criteria we talked about, you see it on the uptrending side, or if the stock is gapping down after a huge daily exhaustion candle like the one you see here for GME. And this is the reason why a lot of pro traders are momentum traders, because you essentially just need to scan for these overnight gap ups or gap downs for the best place on the day. Remember, whenever you have a gap up or gap down overnight over the previous day's closing price, that means at the open, you're most likely going to get the biggest range and the biggest moves in the market. So how do you exactly find these overnight gap ups or gap downs? Well, that's with a scanner. The scanner I use every single day, and you can see here on the template here, I categorize them into the small cap gap scans as well as the large cap gap scans. And the scanner I use is Stocks.io. So really quickly, overnight gap up scans, the ones criteria I use is over here, I'll sort it by gap. But for the large caps, I'm looking for volume above 20,000, gap percentage greater than 3% on the day, market cap, and float. Okay, so this is how I look for overnight gap ups, and I just sort it by gap percentage over here. Now for the gap down trades I take, I'll use a gap down scan over here. I click it, and then instead of sorting by the highest percentage, I'll sort it by the lowest. So I want to see the biggest gap downs on the day. So you can see this is down 8%, 8%, 5%, etc. So the only thing that changed between the gap up and the gap down